Marcus, of course. I work for Vic Properties. Vic Properties is right now the largest developer in Portugal. We have a pipeline of over 2 billion of gross development value and 500,000 square meters of residential space, retail, and other options that we're going to have to use to deploy to make those spaces market appealing. And of course, Portugal has a very specific dynamics that we'll probably be mentioning later. So exciting days in Portugal and at Vic.
Great, Claire. We're going to ask you to do it because then it will look neat when it comes to the film at the end of it.
I'm Claire Thomas. I'm a partner at CMS in London, and I've been responsible for pulling together our latest research looking at residential and the future of urban living.
Great. Andreas.
I'm Andreas Otto, partner at CMS Berlin. I had been in the past head of the German real estate group and have been now since the beginning of this year one of the 3 cohorts of the global real estate and construction group. CMS Germany is part of the global CMS group, and in Germany with 600 lawyers, number one, and with a real estate team of almost 100 lawyers, which I think is also the largest team in Germany. We are doing everything around real estate, including development, public law, the construction issues, and of course the transactions. And as you know, the Berlin legal market is a little bit different. I'm a civil notary as well.
Great. Lars.
Lars Schnidrig. I'm the CEO of CORESTATE. I work since roughly 2.5 years with CORESTATE. Before I was 9 years with Vonovia. And I started as a CFO there, and then beginning of the year became the CEO. So for those who don't know CORESTATE, it's a strongly growth company, in particular in the last 2.5 years. And what we have in common with this panel is more than half of the portfolio which we are managing for our clients is residential or residential linked, meaning micro-living and everything that has to do with residential.
Great, thank you. Stephen.
Yeah, I work for CBRE. We're a full-service real estate advisory firm. I work in our capital markets business, which has over 400 professionals across Europe. And I'm the recently appointed head of OPRE, which is operational real estate, which covers any kind of real estate asset that derives its value from the operation within. And for the purposes of today, that includes student accommodation, co-living, retirement living, and also hotels as part of that as well.
Great. Lots of things to pick up from the presentation, Claire, as well. But I thought it was really interesting in the survey that retirement living came so high and yet wasn't even asked in 2018. Yeah. Really interesting to see some of the changes that there have been in terms of how the market views these sectors. Maybe let's just start with you, Lars, perhaps. Just in terms of the residential real estate, I mean, again, there was the PwC ULI Emerging Trends for the first time this year had, I think it was almost 7 out of 10 of the investor intentions, what people were most interested in investing in, came from that residential side. What's driving that? Is it late cycle play? Is it a fundamental shift in terms of the opportunities perceived in the sector? What's driving it?
Yeah, I think it's a fundamental change in the aging population. So that means the millennials, and you can go through every age class, has different needs today than it was, for instance, when we went to university, so 20 years ago. So, and the question for us, and this is where we put a lot of effort, a lot of resources in, is can we design products for each and every generation that is coming up today? So I found this research excellent, and it reflects actually what we recommend our investors. And the fundamental change between owning a flat or renting a flat is a fundamental change in the overall society, the needs that these generations have. The only thing they really own, obviously, is their iPhone. Everything else, everything, as you said, Richard, everything else they share. So they share cars, they share, they let their goods, which they consume, delivered at home. So they want to be flexible. And I think the biggest challenge for us in this community, in this industry, is to design sustainable products for them. And this is a huge market. You saw this on the working side. We discussed this morning with co-working. That's one trend, and I think you see this as the success of co-working. But the same, and which is even more important, because there are even more real estate assets around, is co-living. So why do you want to have flexibility in your working life and not in your living life? So young people, they have complete different needs when you compare it again to our generation that is more sitting on this side. We were happy living, owning, except you, of course. Living, owning, and we wanted to have stability, security. The new generation, they want to have flexibility, and we have to design in our industry products that serve their needs very basic.
Can I just pick up on something that, Stephen, you might have seen this because it was a video that CBRE put out a couple of weeks ago, and it was just talking about what life might look like in 2040, and they said that job adverts wouldn't actually have a location on them because we're all so flexible, it doesn't actually matter where the base is. You work wherever it sort of takes you. So I think that really fits in with why would you tie yourself to sort of buy in one location when actually even your work might not be fixed anymore.
Absolutely. I can only agree.
And just coming to that, because obviously markets are very different. So there's been, I mean, you mentioned there that actually across the board, and including in London, which was a bit of a surprise, that 67% of people, were less interested in owning and more interested in renting or could see themselves renting. But that obviously, Marcus, is quite different in terms of both the Spanish and the Portuguese market, but I know that you're focused on the Portuguese market, where there's very little build-to-rent product, and actually it's mostly built to sale. Why do you think that is? Is that a historic thing? And do you think that will change over time? How do you see your market in comparison to the others?
Well, let me take 2 steps back to answer that question. In Portugal, what happened is that, it's funny, we now know that rental price freezes are a hot topic. So Portugal had rental price freezes 50 years ago, and the freezes were actually absolute values. So the price you rented your house in 1962 was the same throughout decades. It wasn't a percentage of income or indexed to inflation. It was fixed.
Similar in Spain, I think. No?
Yeah. So what this created was that with time, there was no incentive for landlords, either corporate or private, to invest, because they knew that the values would degrade over time. They wouldn't really have the income to do the upkeep of their property with the quality that they wanted. And also, then after the revolution, it was very hard with a leftist mentality that came from the other direction. Of course, the overreaction to the dictatorship was very hard to, for example, evict tenants. So this killed the rental market for about 4 decades, which means that then in the 80s, people have access to credit, banks, Portugal joins the EU, and it's an aspiration, a cultural aspiration of the Portuguese, as well as the Spanish, to own their house, even if the bank actually owns most of it. This became a huge problem with causing a widespread decay of many parts of the city. And when we had the sovereign debt crisis that hit Portugal particularly hard, one of the key measures of the package, of the aid package of what we call the Troika, so it was the European Central Bank, the IMF, and all of that, was to modernize the sector. With this, another thing starts coming, which is the phenomenon, this coincides with the Arab Spring, and a lot of new tourism starting to come to Portugal, instead of Tunisia, Turkey, Egypt, because the value is good, and the emergence of the digital platforms of short-term rental. So now there is an incentive to renew your property finally, that may have been empty or misused for years. You can now finally, by law, evict old people, old tenants, let's say, or update the rent, or just make a deal that they go. They're not forced to be there throughout their lives and then pass on to their children, because that would happen. And the coincidence of all these factors means that the short-term rental is such a phenomenon throughout Portugal, Lisbon being the 6th volume city on Airbnb, for example, but only the 62nd most visited city in the world.
Amazing.
That kills, again, the rental market, because you want to leave it in short term?
I'm going to come back to that, because I think that Airbnb one is quite an interesting issue, and for sure that's had influences, not so much in London, I don't think, but certainly in some of the others, particularly in Amsterdam that I'm familiar with as well. There's impacts on that. So you mentioned there the regulatory side, and obviously, Andreas, there's been a lot of talk about regulation, particularly in Berlin, on that and how that might influence the residential market. What's your sense of that? Do you think that's, I mean, it's cropping up in a lot of the discussions that we've been having. Is that the same for you? Or if you're sitting in Berlin, does it seem like a sort of less of an issue, really? What's your sense of that?
It's very interesting to hear how the situation is and was in Portugal, and there are parallels, and of course there are differences. And well, we do not have all the regulation laws yet in place which are discussed. That's important to know. There are a lot of discussions, but there's not so much in place yet. And what we are discussing are different things here in Berlin. We have the scarcity of residential space, that's true. There's different reasons that we can further discuss. So there is a political discussion how to stop the amazingly increase of the rents, which makes it for many people difficult, challenging to rent homes. And these are people who are even less able to buy, because buying with a even higher prices, it's even more challenge. So we are discussing several things on the federal level in Germany. You know, Germany is a federal republic, and any federal state has its own legislation. We are discussing a cap. We're discussing even expropriation. There's intended to have a referendum about this. And several things which have one issue in common, to regulate the rents, to give a framework to the market which makes it more difficult and challenging to increase rents, at least for newly released residential spaces. We have to differentiate new projects, old existing spaces. It's everything different. But we have this discussion, and the big question is: does this improve something, or does it things even make worse? Since investors may say, well, If it becomes challenging in Berlin to make our profit, we go then to Frankfurt or to Amsterdam or whatever. We have a free market in Europe, and the capital, you have said it has to go somewhere, but the capital is shy and it looks for the place where the risk is less and the chances are higher. And at the moment, people could say, well, with these discussions in Berlin, we will wait, what will happen, and then we reconsider to invest. I'm more optimistic. I would say many things which are discussed, most things will not happen because they are simply from the legal point of view not possible. It's not only about is it possible to tell owners what they have to do. It's also about is this the right of the federal state of Berlin to have such regulation, or is this the competence, the only exclusive competence of the Federal Republic of Germany? And this is, from my point of view, very clear. Second alternative is true, but we will see how things will develop. But already the discussion is, of course, an issue.
And it's interesting. I mean, we had a couple of sessions on residential, one in London earlier on in September. And there was a discussion about rent regulation and rent control. And actually, the investors on the panel pretty much agreed that so long as it was consistent, actually, that was quite attractive for them. So if you look at the Nordic markets, where it's very regulated, and actually until lately the Dutch markets as well, then actually this was quite attractive. Stephen or Lars, actually, just in terms of that sense, well, let's pick it up with you, Lars, first of all, which is, you're obviously able to invest across borders as CORESTATE. When it comes to regulation, what are you looking at? Or is it really about how consistent that is and actually how attractive the city is in terms of the urban living?
Yeah, first of all, I think we have such a huge imbalance in living. So when we are sitting here on this side of the table and also in the group, when you are working in this industry, you also, I think we have to take care that this imbalance is a bit more closed, because otherwise we will have no sustainability in our industry. You see this in the car industry, you see this in many, many other industries. If you don't respect the wider so to say, needs, wishes, whatever you call it, of the society, you will not have a sustainable industry. So what does it mean? Stress in sectors, in industries, cries also for innovation. So innovation means new concepts. If we see we don't have enough beds where people can live in, say, take Berlin. So this was, I think, when we were creating actually co-living student apartments in these stressed cities, right? So I give you one simple example. You have a 2-bedroom, you can rent it to one person, or you can do a co-living with 4 rooms or 3 rooms. So you have 30%, 50% more people that can live in these flats. So I think the innovation I wouldn't left out of this issue. So these are, and then when you look, people need homes, they need flexibility, students, young business professionals, and also elderly people. When you look at what their needs are, they don't want to sit in a room alone with 80 years old and talking to nobody. It's about creating community spaces, and this is what we are doing. So creating community spaces, they all have their 10,000 friends, you know this, on, I don't know how many in these social networks friends we all have. But real friends, this is what they are looking for. And moving from city to city, it's good if they can land in a flat or in a student young professional accommodation where they meet friends. So innovation can help there. I'm tending to be a bit of regulation because it helps to close the imbalance. And it's not good that people can't afford living anymore in the top 7, top 15 cities in Germany. It's not good, per se. And it will hit us. You see this here in Germany with loads of property holding companies, top-notch companies 2 years ago. Today they are criticized for the same business model they are doing. Because so we have to work together to close this gap. I think from the government that will bring nothing to just the caps, and they need to provide more land plots. that we can build what we are actually doing with our clients, new homes. Very simple speaking. And you see this when you look over Germany and I think many other larger cities also in Europe. You have the plots there, but it has to be brought to the market. And you have very good examples in German cities where that has happened, former railway land plots that are constructed with also innovative serielles Bauen, for example. I don't know the English phrase for this. Pre-construction, that it goes, prefab. So it's too long. We have to bring new flats, more flats to the market. And rent control is not creating that. It's just helping a bit, pushing down. But when you look at the data, and this is, I think, what we, why I like research in general, the over-demand, this will not be closed by all these initiatives, but we can work on providing individual customers like students, young professionals, and also elderly people. Elderly people can't afford expensive nursing homes and all these things. So why don't create products that just offer them to live there for a bit higher price, but not for a price they anyway can't afford? That's what we call assisted living at the end of the day, right?
Okay, good. There's some things from the French market also that I'll pick up on. But Stephen, I mean, this is a new role within CBRE. I suppose, is that a recognition that this market, you're seeing significant growth in this market, and obviously it's operator-led to a certain degree. And I suppose, are you seeing significant differences between operators for co-living versus student housing versus, I mean, how complicated is your day job going to be, Stephen?
Well, you seem to have made it quite complicated with that question. I think just going back on the regulation thing, if I may, I don't think regulation per se is a problem for some of the investors getting into the space. I think they're not in it for stratospheric growth. I think they're in it for revenue. And I think stability of revenue suits the customer. I think where it becomes potentially a problem is in new products where there's a artificially low level of rent above which, certainly with construction costs, it becomes complicated to develop at that level. But I think regulation per se isn't something that's going to necessarily put off a lot of the capital that we've seen coming into the sector. So,
just sorry, before you go on there, just to pick up from something that was in the research, we actually asked whether people thought there should be more regulation to help tenants. And of course, all of the consumers said yes, but we were quite surprised that 50% of the real estate professionals also agreed with that. And I think it's, Lars, you talk about people need somewhere to live. And I think that's a sign of the real estate sector taking some responsibility, because this is an emotional sector, because it's people's homes. And I think, the real estate sector is aware of that. Mm.
So on the other part of the question then, Richard, I mean, I think that in terms of, obviously there are nuances across the different living pieces, but I think what we're really doing is providing a service-led residential offering, and I think that there are lots of common grounds among those offerings. I think the key thing is community, and I think that at all parts of the age spectrum, loneliness and isolation is a bigger problem than people have historically understood, and I think we're getting a much better awareness of that. So I think as a priority, communal parts of these sort of developments and these offerings are key. But there are nuances. People want different things at different parts of the age group. But health and fitness is becoming actually important at both ends of the spectrum. For young people, they want to be fit and healthy, and older people are becoming much more conscious that some kind of fitness level keeps them healthier and keeps them away from the doctor and allows them to enjoy quality of life. I see there's a lot of common ground amongst some of the offerings. I don't think they're so different.
Could I raise one question?
Yes.
Is community really the solution? Is there a real sustainable demand of the younger generation, which will continue if they become older? What I see, of course, young people like to share, you described it, but will this continue if they become older? Is this a phenomenon of young people or of a new generation? I have some doubts, and at the moment I see that still in the statistics, the ratio square meters per capita, at least in Berlin, I think all over Germany, is still increasing. Any person here in Germany from year to year owns or uses more space, and more than 50% of the households are, at least in Berlin, are single households, and this is still increasing. So the question I have is a real change of demand, or is it more a wish from our side that this could be the solution if more people live in smaller space? This was already the solution after World War II, when we had no space. The state obliged people to live together. Who had the space had to host other families which lost their space, or refugees or whatever. I don't think that we will come back to that situation, even with the discussion, with such a discussion we had when the big wave of the overwhelming wave of refugees arrived. But is this really the future?
And I mean, there's been a whole series of things around sort of whether you call it cradle to grave or whether you call it life cycle or investing across that. It's interesting just to see how things have developed. So let's say 5 years ago when we started doing events on student housing, everybody said that it was impossible to have a pan-European strategy for that, and that's changed. Maybe 4 years ago when we started doing micro-living, nobody knew what micro-living was, and then that's very well known now. Stephen, do you think there's, coming from a capital markets perspective, do you think there's an ability to be able to have these sorts of, I suppose, you know, life cycle investments as a pan-European strategy? Because a few funds have been set up recently, Aberdeen Standard, for example, and others, but specifically targeting this sort of, I guess, you know, the type of assets that are now fitting within your role.
Yeah, I mean, I think a pan-European, and when we talk about pan-European, I think we're probably talking about just a dozen cities. I think that's where it's not, you know, every dot on the map and having a geographic presence. I think it's targeting key demographic trends in the bigger cities. So, and again, I think that, you know, some of the capital cities are experiencing similar trends from people moving in and younger populations and stuff. So I think I don't see a reason why, and look, I think at the end of the day, the operators will listen to the capital, and I think the capital is targeting the region, and so I do believe that it's absolutely possible to have a pan-European strategy.
Okay, good.
Yeah, we actually are doing this. Yeah. So we started in Germany, then Austria, Switzerland. We are in Spain, UK, and now we're spreading out. And I think there are 3-4 ingredients you need to make this a success, which is definitely there. You have the demand. So if you take student housing, I think in Europe, core Europe, excluding your beautiful UK, you have 14 and a half, the island Europe, if you want, 14.5 million students, and I think you have 1.4 or something like that, beds for students. So this shows clearly. And I'm with you, it's about these dozens of cities. And secondly, what you mentioned in a side note, you need to have the operator, and that's a big challenge. So you can have the most wonderful hotel. If the operator isn't working, you have bricks. But you want to have, if it's community, if it's Wi-Fi, if it's whatever it is that the client wants. And this your operator has to make sure. We are managing now 30,000 beds throughout Europe. I think we and maybe one or two others are the only operator actually who can do this in Europe. Because a single student housing operation doesn't give you the economies of scale, doesn't allow you to invest into IT, into. And therefore you need a certain scale, and this is currently starting in Europe. And then thirdly, you need the capital. But looking at, and our new ECB presidential is helping us, looking at yields of whatever it is below 1 in the medium-long term, in the medium term definitely. And with student housing, micro-living concepts, if you have the right operator, that means also you have the right rents, and people are only preparing to pay these rents if the service is very good. So it's all together with the operations. And then you can drive yields between 4 and say 7-8% in Poland. That's fantastic. On a business model where you have absolutely over demand. I mean, coming to the students in Europe, and which beds are available. So you have the capital, you have the client's needs, so it's only about doing it. And now it comes back what you see in this in the real estate investment market. Why hasn't that been done in the last 10 years? Because there were simply not that big platforms who had access to capital, who had also management. I mean, that means you need a head of IT who basically is coming maybe from a larger company who understands what the operator on IT level needs. And this is currently what is happening. I'm sure in 2-3 years we will sit here and we will see 2 or 3 pan-European, whatever you call it, cradle-to-grave funds that have been established.
Lars has mentioned the top-down sort of infrastructure part of it, which is you need scale. But I think that property is local, and I think that that's been the problem for the capital, is accessing the product. It's quite fragmented, and having a single point of entry through an operator has been historically difficult. But that's why we've also seen some of the global capital coming into the space, snapping up the operators, because they then see that as a way to go and try and develop that, because it just doesn't exist, or it's very rare. So we see those platform deals, and I think we'll continue to see those platform deals.
And I'm going to come to you in a second, just but that's interesting, and I'm going to come back to that operational side. And also, you mentioned Poland there, and it was interesting to see. I was mentioning it earlier that Japanese capital just made a deal in student housing for the first time in Poland. So it's interesting to see how these things are moving. I wanted to pick up with you, Marcus, just that idea about service, and I suppose what is being required, because Lars there talked about scale, and obviously in terms of what you're looking at with sort of actually creating a new area, I mean, it's not quite a mini city, but it's definitely a new area in Lisbon. Mm-hmm. What does that mean in terms of service? What are the expectations? And also, are you having to do things around, operators in the same way, find the right hotel product to be there, find the right shops, find the right... is this also beginning to be about curation and those kinds of aspects?
So, as we mentioned, capital looks for returns. So you're going to invest, but you're going to need the revenue. So you're going to have to create something that has a market appeal. And for us, what we have seen is that if you don't create something that is differentiated and that people want and that they're naturally drawn to, you're going to be doing the same as everybody else, which means that you're going to be competing for an undifferentiated with an undifferentiated product. So you're fighting for scraps of market share, which means that they then start cutting costs, and pretty soon you risk being in a downward demand spiral that is no good in the medium term. So when we see macro trends, like what we tried to do was tap into the macro trends, but also because we built those capabilities, we were able to move fast, execute quickly, so that the macro trends are still going on, but we are walking in the shadow of the buyers and the customers in general. So we tap into the microtrend, but then we execute fast and we get to market quicker, because we're in real estate, the project timelines are quite long. So whoever moves quicker, whoever's quicker in the decision making and has the execution capabilities and access to capital is going to move faster. And then with that, you need to have a vision. And the vision needs to be a curated whole, cohesive, that makes sense, that is appealing, and that people are going to come into living. For that, when we are talking in our case, we are building new neighborhoods in the city. And so you need to have living space, sure, but you need also a space for people who are coming in for a couple of days. You need to have shops for them to go to. You need to have parks for them to walk the dogs. You need to have, because we're, in this case, I'm mentioning Lisbon, you need to have somewhere to enjoy the fact that you're by the river and that you're in a sunny location, so something that makes sense and that's going to allow people to enjoy the life that the place invites you to have. And all of these systems means that you're going to have to partner up with the other businesses and the other entities that are going to make a neighborhood, a new neighborhood, and something that's going to make sense and that's going to stay and become a real destination throughout time, so that the value generation is continuous.
Okay, good. And I wanted to drill down a little bit more. I mean, you mentioned pets and various. Were there some other things? I mean, interestingly, though, one of Europa Capital were building a development, and they added. I'll go back and check it, but they added something like a thing saying, you know, you could pay an extra £100 a month in order to be able to have a pet. When they thought the take-up would be about 5%, and it was actually 35%. So very interesting, that point about pets, because that was what was happening, and that was a build to. I think that was actually a build to sell, and then you had to pay that on top as part of what you were doing. But were there any other key things? Because I know you couldn't do the whole of the report in the presentation, but in terms of the demands from the consumers, people like us who want to live there, were there other interesting things you wanted to pick out?
Yeah, there were a couple actually, and picking up on one of Stephen's points was around sort of space. People said that they would be happy to have actually less private living space for better communal areas, so that shift from what sort of is exclusively yours to the community space. The one that always, I think, divides everyone is swimming pools. I think people think that they want to have a swimming pool. We acted for a developer of a residential tower block in Manchester, and really interesting, they completely refurbished a swimming pool on one of the upper floors at great expense. And they did a tenant survey as to, you know, how often the pool was being used. And in the first month, it absolutely rocketed. And then after 1 month, nobody was using it again, and they went to the tenants and said, well, why have you stopped using it? And it turned out no one was actually using it. They were just taking pictures for Instagram. So I think it's really hard for developers, because consumers, you know, they think they want something, but they don't really. So it's just getting that balance of what's actually going to be a meaningful.
You have to drive beyond
the pole. Absolutely.
Because if it's already in the pole, it's not strategic.
But then it comes back to a decent operator. If you design the space and that you understand exactly what you said, what your clients want. For instance, we have a pool, but it's in Madrid. They want in Madrid.
Open air.
It's open air.
Yeah, that's different.
It's open air.
Less demand in Glasgow, I would imagine, for a pool, rooftop pool. There's a question come in, thank you very much for that, for Lars and Stephen. From an investor's viewpoint, what about overlaps in the separate operational models? So, for example, extended stay hotels versus co-living. So are there sort of overlaps, do you think, in these areas?
Might pass that to Lars first.
Yeah, when we started with student apartments 10 years ago, we discovered 30% is non-student. So you have an overlap, yes, But that when we created, obviously, our product line for young professionals, for business travelers. Of course, I also can live in a student apartment, but do I want this with 47? No. So I rather want to have a bit more decent business apartment. It costs some euros more, and it's maybe more central to the CBD. So I'm coming back. There's so heavy over demand, and the good thing is that we'll stay for longer because the aging population, the more flexibility, and the community question you had in the beginning, I think that has a lot to do with 30 years ago, everybody was in his village or in his city, then he was in his company, but the more you move, the less you feel home. And that's why the research obviously indicates rather small bedrooms and therefore larger community places. And I think we have to be careful that we don't stretch this in having 20 co-living products, but I think students, young professionals, elderly people, these are 4 or 5 products which, based on very clear research data, show over demand, and this is what we are doing.
Yeah, I mean, I think those definitions exist more for the investor base than maybe for the consumer. Right? I mean,
the choice has always been there organically.
Yeah.
If you moved to study somewhere, there was always somewhere.
You're not going to move
could
to a
rent
retirement
room
village,
in a family home. You know, the choice. It was more pulverized. It was more informal, but it exists. You know, people were living through their life cycles before you know
these definitions.
Corporate investors moved in, and in that sense. So it's always been there. So whether you can do something that is competitive, whether it's appealing, and whether it's going to drive demand and really tap the ball home.
100 years ago, very plausibly, several generations were all living in one room in London.
I'm particularly fascinated because we go back again to students, millennials, which millennials now are students and early stage professionals. Maybe some are starting to have a family. And we see them as, in my opinion, the generational common themes are stronger than whether they're in Portugal, Spain, England. There are very, very strong values across generation because we have now the Erasmus generations. They have already studied in other places. They've already had a girlfriend and boyfriend in other countries. They have friends. They stay in touch, but they have a generational theme, and we see them as very sort of detached, non-materialistic, work-life balance. But we have to see that objectively because of their income levels and the need, for example, that in order to buy property, you're going to need to have 20% up front. And they don't, so many of them are locked out of the purchase option. But what I'm particularly fascinated, because it's not that far off, I think maybe 10 to 20 years, is what's going to happen when the largest equity holders ever, which are their parents, homeowners in Europe, with 1, 2, 3 children, pass on this property. Are they going to become more materialistic, like the hippie generation of the late 60s and 70s did? Are we going to see that same? So they were all, yeah, free living, and yeah, we don't really care about material. Oh, wait, but now I have a house. Now I have some equity. Now there's something worth caring about and being worried about.
It's a financial issue also. If they have the possibility to buy, if they have the money, many of them will do it. There's a change of culture. But if they have children, if they have the money, and there is not necessarily affordable, but for their money affordable product, perhaps here in the suburbs of Berlin with a nice garden where the children can play, they buy it. Even the younger generation, I think so.
But I think this capital versus revenue thing is something that's going to be really interesting to see how it plays out. You've got the capital-rich, baby boomers, and you've got the revenue-rich millennials, and that's what's driving this change in the way we look at real estate now. But as Marcus said, as that capital gets transferred down, does that change the psychology of somebody that's been renting for 10 or 15 years to make them want to become home owners, or do they see that as not the best use of that capital? Because I think there's habit as well, and I think that, look at the baby boomers, the dream was that you would own your own home, gave you stability, but I think people are getting those or similar benefits from renting today. And I wonder whether it's a psychological shift that's going to last. But that goes back to what you said earlier.
Perhaps different from culture to culture, the mentality, I think it's very strong in the Iberian countries. The feeling, I have the bricks, the golden bricks. Huh? The bricks are mine, and that's a sure investment. And if you have the benchmarks, and where are alternative investments, you have a relatively sure investment and the feeling it's my home.
But again, that's an interesting point, because you said, is it a geographical, cultural commonality, or is it a generational commonality?
Both.
It's very interesting. At least to me, it's fascinating to think.
We don't know the answer, do we?
No, because so we look at these macro trends, right? And are they moving continuously in one direction, or is it going to be cyclical? So one of the things that we are seeing, and this is happening already in Europe and in North America, is that the post-millennial generation, and what are now being called the children of the crisis. So the kids who grew up, and they were like 6, 7, 10, 12 years old, and maybe their parents lost their job in 2009 when there was a big contraction, and they saw a bit of hardship for the first time in 50 years in the Western world. We are seeing that they are more materialistic. They are making choices as students to study economics, not so much the humanities anymore or the artistic extraction type of content, but going for the math, for the science, for the economic, for the business. So this is affecting their choices, and this is going to be introducing the next cycle of the market. So there are going to be many factors coming in over the last 15 years. So if you're making a decision now in a project that's going to take 10 years to execute, things that may have fizzled out, or what are you confident making decisions about? How quick can you execute? What can you move in to really tap into that opportunity?
I mean, one of the interesting things I think is, it was, we mentioned capital earlier, and I want to come back to that a little bit, just because you've obviously got, there's the macro shift, which I think is right, and I think people would agree with that. You've also got negative interest rates. And whereas maybe 6 months ago, everybody thought that we'd be on a rising cycle in the US, that actually the end of this cycle was going to happen, it was coming, everybody. But actually now, with interest rates dropping, it looks as though those are going to be lower for longer. Japanese capital now more familiar with the sort of interest rates that we've got, and more capital looking for a return that they can't get. So does it mean that things like affordable housing, those kinds of issues that might have been a block perhaps on investment because return expectations are going to be lower, that actually that sort of more regular, almost bond-like return is going to be more popular from a macro point of view?
Real estate has always been a sort of bond proxy, so I think that hasn't changed. I think I said it earlier, I don't think people are getting into this space for stratospheric growth. I think they're getting in it for consistency and revenue stability. And I think that the occupancy levels of some of these operators is 95, 99%. So I think that that's what the capital is looking for, stability of income. I think whether it's Japanese capital or Canadian capital, which I think they're looking for the same thing. I mean, whether it's affordable housing or luxury, I think there's the market is so immature for all of those products that I think at this point they're all attractive.
mean, interesting is why are 30% of the institutional investors are underallocated? 30% underallocation from institutional investors in real estate. Why? And that comes back fragmented market, pension funds. The yield gap between bonds or rates and real estate. And again, we need 3, 4, 5% for our pensions. And where can you get it? In real estate. Why can you get it? Demand supply. Tremendous gap, and it's getting worse and worse every year. If you are in the right locations with the right product. And why are they underallocated? Because they can't find investment managers where they can deploy the capital. Very simple speaking, you have in Europe, I always saying this, 100 investment managers, real estate, below 10 billion AUMs, assets under management. So it means if you are below 10 billion AUMs, you don't have your own operator, you don't have your own infrastructure, you don't have access to capital, you can't do, it's also an interesting thing, you can't do co-investments with your investors, so you don't have the same regulations as banks have. As an asset manager, investment management, therefore alignment capital is important. All these things come into play, and that's currently changing. So because the product is needed from the society. People need more homes, they need spaces, and now the real estate, I would say in particular in Germany, in Europe, the real estate, asset management, investment management industry is professionalizing. And coming back, we saw this, I joined Vonovia in 2008. And when you see what has happened with the whole companies, we all know that. And the question is, will our kids, do they want to show, this is my flat? Or do they want to say, I have 1% of my, whatever, fortune is managed by one of these companies, one of these asset management. 10 years ago, I would rather vote for this is my flat. Today, the professionalization of this whole sector is so rapidly and going 10 years further down the road. It's like equities. You buy your own equity or you have a fund manager, right?
And just Claire, from your point of view, did anything come out of the research which I suppose was looking at this particular area, and also the way that might progress in terms of co-living? For example, we've got, co-working has been around for a while, and you've got a very big dominant brand in WeWork that's just listed, and then you've got a lot of smaller brands. But at the moment, there's not really a dominant brand in co-living. There's lots of small brands across different cities, all have their own different ones. Was there any sense of whether or not that kind of thing is going to change?
Yeah. I think one of the particular issues with co-living is the difference in the planning treatment sort of across Europe. So it's very difficult in the UK because we have the minimum living sizes, whereas in Germany I don't think you have them. So trying to create a consistent brand across Europe is very hard just because each project needs to be different. I know when I talk to the collective in London, what they say is the worst thing that can happen to the co-living sector is it gets saturated by operators who actually don't know what they're doing, and then it sort of cheapens the offering. So I think it's all about sort of brand and using technology to create sort of a really slick product that people want, but there is a risk that if it becomes saturated, you lose that sort of distinct parcel of what you're offering.
Regarding
and then you're cutting costs, you're cheapening the product, you're lowering demand, and
regarding office, where we have different markets, it was possible. Huh? Perhaps some years ago we wouldn't have considered it possible that somebody as WeWork would have a product all over the world, which is more or less similar, I guess, in London or Berlin, even with different working environments. If you look through your offices and ours, we are working a different way, but they have this product with success there and here. I don't know if I have the imagination, but perhaps the markets, even in residential, the future will become closer, and people who described it, young people knowing how people in other cultures live, you described it, they're marrying somebody from somewhere and know that life can be different. Perhaps there will be created a mixed culture of living, which brings everything closer together.
Moving around.
You know how people live in Madrid,
but regarding capital and what it looks for and whatnot, and tying in with the IPO of WeWork, it's very funny because what we see is that WeWork has IPO'd, but the market has spoken. So IPO and WeWork tried to IPO as a tech company to get that tech upside, but the market answer was, we're not sure you're a tech company. We think you're a real estate company, so we perceive your value to be not quite what you think it is. And this is what we think you're worth. And it's very interesting, the contrast when choices are being made and value is being stimulated. Ultimately, reality is gonna be louder.
But that is a huge opportunity. We have lined up with Medici and Quarters. So in a JV, because also you bring together tech and real estate. And they're coming back. Of course, WeWork had this, they have done it already, all right? And I'm coming back, you can only create such a platform, it's always the same if you have the operations. So I'm absolutely convinced that co-living in some years, it will be enormous. Of course it will be. But it can't be today because the operator hasn't been established in the capital markets, at the investor. It's just starting. So what we have why have we lined up there with one of these companies? Because we bring the real estate know-how and they obviously bring the other know-how that's coming from the prop tech. And you see this in many distribution when it comes to prop tech companies who are more capital distribution, who are more prop tech, but have rather limited resources when it comes to real estate. And real estate per se is rather a very, you're right, speeding up, but the combination prop tech and real estate is not so easy. So if you have great real estate guys and have great prop tech guys, I think you have not, by definition, a cultural fit. And this is...
There may even be a fundamental incompatibility, I believe.
Absolutely.
Because just the mentalities are so different.
They are different, and if you have a certain size, what we have now close to 30 billion assets under management. We have a head of IT who is not a normal head of IT. He wants to digitalize the industry. So from a certain size, you can bring people in from prop techs, from wherever you want. But for that, and when you look across Europe, certain size, you have the machines, the real big ones, but innovation with smaller ones, this is actually where we are. Now there are certain platforms creating, and they attract these talents. And that will be one of the major opportunities. Co-working, I am absolutely convinced, why shouldn't we have the same success on co-living? There are more real estate, there are more needs, trends to flexibility, loneliness. Loneliness is a big issue for elderly people. They don't love to sit in their elderly living homes where they sit alone. This is not what they want, right?
It's about operation, you said. Find the right partner for operation, and there's a gap. But I would say we, as a real estate industry, have also to learn how to operate, because my perception is the money is made with the operation. WeWork makes the money not with the real estate, makes it with the amenities and with the operation. And ask myself, why letting them the money, such service providers, if the real estate industry can learn it as well and make it on their own? No?
We have to see that the building block of the digital economy is scalability, right? They can replicate and they can serve 1,000 customers, 10,000, 100,000, 10 million at almost no marginal cost for each new customer that they're serving. Just because it's scalable. It's there, and people can just keep coming, and it's no extra cost. You cannot do that with real estate. Having two spaces is always going to be more expensive than one. Maybe not twice as much, but it's always going to have a marginal cost. And it's the same with amenities.
That's the reason.
And it's the same with anything that is physical. When you add more, it's going to cost more. So it's not like Netflix having their series, which they paid for once, or maybe for the rights of emission, but it's in the cloud. And it doesn't really matter how many people are watching it, because for them, it's there and they have the capabilities to serve you. And with WeWork, I don't see the core of their business being that, having that level of scalability and replicability with no impact on cost.
I think the tech part of WeWork just facilitates the real asset usage, right? It's a facilitator, and that's why labeling them as a tech company was always a fake label anyway. It's a facilitator.
The real estate or the other part? What's the additional service? From which side do you come? Yeah.
But if you look at Booking, Airbnb, it's the same. They bring volume to an operator. They may have their own sales channel, and they do create the volume and the occupancy. So no waste. Let's say no empty seats.
But the efficient.
But it's not really there.
But the efficient prop tech parts, or even in other sectors, it's not always the efficiency to the capital. It's the efficiency to the consumer that drives the success.
Sure.
And so what WeWork has been clever at is making it more easy, efficient to use space.
So you see the added value
book a
of
meeting
technology
room, to book a
as a distribution tool for the
consumer,
property,
for the tenant. Consumer.
I wanted just very briefly to look at what this means also for the investment market. Lars, when you're looking at, it was interesting that Clare mentioned that broadband was obviously the key, but actually that infrastructure in a way was less important. When you're looking at destinations for where you might invest, where you might develop, what are you looking for? What are the key things for you that make that an interesting proposition, I suppose?
As usual, research data. So is the demand there for the specific product? Therefore, I'm coming back to you with your 12 cities, or how many are these? So we are currently looking into where can we develop, so to say, replicate our Spanish industry. Where do we have not sufficient beds simply, or other products? So I think it's all about data. It's about research. It's about consistency. And then if you have obviously a gap in demand supply, you create a certain yield, but this yield selling sustainable to your investors is only possible if you have the right infrastructure, if you have the right operations. And as you do when you buy your own equity or a share in a listed company, you do your research, and this is where we spend enormous resources in, because I think investment management based on research is the right way to deliver sustainable yields for your investors, and this is how you grow your client base.
Okay, and a very quick one. Brexit slightly mentioned in Clare's presentation. Do you think that's actually going to increase, especially for students, let's say, who are more likely to be moving across border? Do you think that's likely to make continental European cities more attractive in terms of students?
Me?
Anybody can answer that.
Maybe I'll start. I mean, I think that one of the attractiveness is of UK universities. You've got some fantastic universities, obviously, and they'll attract students from all over the world always. But I think that the benefit of sending your child to an English-speaking country is attractive, and I think that will boost and continue to help grow perhaps some of the second-tier universities. But one thing that was interesting I read recently was that actually in Amsterdam or in the Netherlands, a lot of the courses are now being taught in English, even though it's a Dutch university to Dutch students, because they just realize the benefit of that in attracting international people to those courses.
It's
the
about
two biggest
Brexit.
student.
What this? We have international universities, even in other countries, even in Germany, where we are very reluctant to go. We have international schools, we have international universities, English speaking, but I don't think it's about Brexit. It's a big industry in the UK, getting students from other countries at schools, boarding schools, and at universities.
Enrollment are already lowering.
Sorry?
Enrollment levels are already lowering in the UK and in the US, which are the two biggest volume destinations for overseas students. So who's going to capture those?
But what I wanted to say is that any UK government would be very, very silly to well, we were surprised.
There you go.
Very, very silly to bring this in danger. It's a big business. It's a big business.
On that point, I think that the UK Prime Minister is just advocating the fact that actually, having completed a course in the UK, you can now stay for a longer period of time in the UK looking for work as well. So I think that some of those things are being addressed.
No, that's true. They have changed that,
We have in the UK, or you have in the UK, I think more than 2 million students, and 600,010 student beds. So there is quite a gap to go, and I totally share your view. It's not about if they are in or out.
But that's the opportunity as well. Just that, if you're sending your child from China or from Korea to a UK university, or any university really across Europe, you want them going into accommodation that is easily understood and labelled and a consistent offering. And so that's the opportunity specifically. I think for local students, finding local beds, that's a bit easier. They can go to the broader market. I think where the opportunity really is exciting, and there's still a supply-demand imbalance, is in that international student and capturing that.
Okay, good. We're in Germany, so we're going to be very efficient on time. We started about 3 minutes late, I think, and it's almost time to finish now. So 1 minute each on where do you think this means, these longer-term trends, particularly for this, where does that mean people should be investing their hard-earned capital? Let's start with you. So 1 minute each, go.
Okay, so this is, of course, something we think a lot about. Me being from Portugal and familiarized and knowing the coexistence of factors that are right now putting Portugal and Lisbon on the map, and knowing what people are doing there, and what even I'm doing there, or my company is doing there, I see that it is a space for opportunity, and that is widely recognized. It didn't come top of the Lisbon didn't come top of the cities to invest in Europe at the PwC study by chance. That said, it depends on what you know, what the DNA of your business is, what you're comfortable making decisions and allocating your cash, and also sometimes what your vision and mission is. I mean, who are you as a company? What are you about? Is it just a yield you're looking for? Is it to do something else that maybe not have a biggest revenue immediately, but it's really going to make your mark in the world and bring other opportunities further down the line? A very extreme example. Who's going to be the first one to do something in space or on the moon? It's not going to be profitable, but it's really going to make you a force to be reckoned with.
That's definitely one for the coffee break. I think space.
So I wouldn't invest in space.
We can't open
but
that up.
So it depends on what you're looking for, what you believe you can do better, quicker, and with the biggest upside.
Great, thank you, Claire.
And answer this in a slightly different way, and rather than thinking about where to invest or which particular asset class, just think about the internal run-ins of property companies. I think generally we have lots of surveyors, accountants, and Lars, you were picking up on your head of IT. It's just making sure that property companies have actually the right skill set to keep up with the way that, you know, the world is changing and make the most of all the technology. So I think it's, you know, internally thinking about, are we investing in the right things within our companies?
Okay, good. Andreas.
Okay, yes. As always, as we say in German, not all the eggs in one basket, regarding sector and regarding location. And however, we should look for a market which has a pretty sure legal framework, secure financial system, which is not saturated yet. Major potential because it has a future still ahead, and a lot of space left to develop new things. This means come to Berlin.
I thought it was going to end there, Andreas. Yeah. Lars.
We are in Berlin. So, I can only recommend, and we will continue to invest alongside that is driven with products that are concentrated on megatrends. And micro-living is the most obvious. There, it's about finding the right cities. So we are following their city strategy. And I would really name the three things: students, business, and co-living. This is what we are doing.
Okay, great. Stephen.
So I'm going to ignore perhaps geographical nuances, and I like Marcus's point earlier about the sort of generational commonalities. So I think that nearly wherever I go across Europe, young people want to be mobile and move and do exciting jobs, and I think they're less fixed on locations. So I like the co-living space. And then, again, another point we touched on earlier, just the sheer amount of capital with the baby boomers and them reaching retirement. I think there's a lot of potential in retirement living space to provide good quality accommodation, and that also has a knock-on effect of freeing up other stock for the younger generation to move into. So I think that those two things are really exciting.